Today we're going to look at a different way that they can ask the general ledger, and more specifically the trading stock account. They give you the trading stock account and they leave out certain information. This is the trading stock account, not so clear up there, but it is. And you've got to put in the missing items on the general ledger. Now this can be a bit more complicated for some, but let's look at how we can do it. First of all, when we do any accounting account or record or statement, we've got to know the layout. In other words, what we must put into the account. Now if we look at a trading stock account, it will always start with the opening balance on the debit side. Why? Because trading stock is an asset, and the asset increases on the debit side, so it will have an opening debit balance. So on the debit side there will be an opening balance. What makes trading stock more? Mainly if we buy new stock, we'll have more stock, and we can buy stock two ways: for cash. If we buy it for cash, we have to pay for it, so it will be a CPJ. So cash purchases, yes, or we can buy it on credit. If we buy it on credit, it means we owe somebody money. We call that person a creditor, so it will be on the creditor's journal. So the CJ and the CPJ will make it more. That's when we buy more stock. If a debtor returns something to us, we'll also have more stock. So a debtor's allowance journal will also make it more. And then there may be small payments we make from the petty cash journal for delivery or whatever of stock, which forms part of the cost of the stock. So there may be small PCJ entries and any corrections on the general journal. But the main things, the purchases, CJ and CPJ, and returns, DAJ. What makes stock less? If we sell some of our stock. Again, we can sell it two ways: cash or credit. If we cash sales, we'll receive money, so it's a CRJ. Credit sales, if we sell it on credit, we call that person a debtor, so it's a debtor's journal. Or if we bought some stock on credit and we return it because it's faulty or whatever, and so then we'll also have less, so a CAJ will also make it less. And then any corrections on the general journal. So those are the items that will affect the trading stock account. At the end, you'll have a carry down balance on the credit side. You'll have your totals, and below the totals on the debit side will be the closing balance. Cannot be the other way around, then it becomes a liability. So it must end with the balance like that: credit carry down, debit brought down. Good, so let's go look at the question again. So the first thing is the opening balance brought down from last month, but it hasn't got an amount. Now how any general ledger account works: whatever the total of everything above the double lines on the one side should equal the total of everything in the double lines on the opposite side. So if I add up all of this, it must give me the total there. And if I add up all of this, it must give me the same total there. So these two must be the same. So if I've got one item missing, I can simply add up all the credits because they complete, get a total, add up the debits that they gave me, get a total, and work out the difference. And that will be what A should be. So let's see. If I take all the debits, it's 6880 plus 7430 plus 2220 plus 90. It gives me 16620. So that is all these debits that I've got. If I look at the credit side, all these amounts, let's add them. that was 950 plus 9,200 plus 8,500 plus 60 plus 2410, and that gives me a total of 21,120. So they're not the same. So the difference between the 21,120 and the 16,000, that would be the missing item, which is the opening balance. So let's work it out. So it's 16,000 out of 21,120 minus 16,620, and that gives me 4,500. So A would be 4,500. So let's go and put it on the answer sheet. Okay, A. So what did I do? I got a total for the credit side, which gave me 21,120. I minus the total for the debit side, 16,620, and that gave me 4,500. Let's just make these ones a bit bigger. Good, so we can look at number 2 then. Let's go back. Or B. B, it says CPJ. In other words, it came from the payment journal. Remember what I said, 2 ways to increase the trading stock account, or a couple of ways to increase it, but the main way would be to buy new stock. And we can buy it cash, which means CPJ, or credit, which would be CJ. So this was cash purchases, CPJ. CPJ, opposite account, because that is what we want for B. What is the opposite account? Always bank. So bank, B would be bank. Okay, C, we said the other way, cash purchases or credit purchases. Remember, this is the folio column where I need the journal. What type of journal would it be if we buy on credit? Because it's for the creditors. Creditors would be on the CJ. So C would be creditors journal. Good. D. D is now a DAJ. Remember, we're working with the trading stock account. Think of a DAJ. A DAJ basically has 2 columns, a sales column and a cost of sales column. The sales column is what is returned by the debtor, and the debtor must be credited or reduced with the selling value. But then the cost of sales, that is the other column, and that always goes with cost of with trading stock. So in trading stock, I would put the opposite amount, which I put in cost of sales. So D is cost of sales. Any debtors journal to do with trading stock, the opposite account will be cost of sales on the DJ as well as on the DAJ. E, petty cash. Petty cash would go onto what journal? Payments out of the petty cash goes onto the petty cash journal. So E would be PCJ, or the petty cash journal. Okay, they want the in there, so it would be PCJ. That is the folio reference would just be PCJ, sorry. And C would also just be CJ, not creditors journal, because it's the abbreviation we need to put in the folio column. F, again, creditors control means what would make it less if I bought